This is the Friday, April 7th, 2017 version of the Market Plus segment. Joining us now is Angie Setzer. Angie, welcome back.
Thanks for having me.
Always excited to have you. Angie, we got so busy talking about the markets that we skipped over cotton, and that was a big break this week. 387 to the downside in cotton. What happened?
Well, we had acreage come in about 1 million higher than what even the National Cotton Council had said in February.
12.2 million acres?
12.2 million. They were expecting around 11. I think traders were expecting 11 and a half or so. We have seen exceptional export pace. I mean, our exports are leaps and bounds ahead of where they were a year ago. They're well on track to meet and exceed the USDA. So your old crop cotton strength is there, but unfortunately that's encouraged everyone to say, okay, I'm looking at wheat, I'm looking at corn, I'm looking at soybeans, I'm looking at peanuts. Yeah. I'm gonna go ahead and grow some cotton.
Okay. So do you anticipate, I mean, now that we're kind of getting our acreage mix worked out, particularly in the South, we'll see further weakness in cotton if this 12.2 materializes?
It depends on if the weather dries out or not, because of course it hasn't been planted. So the areas that you've seen some pretty heavy rainfall in are areas where the increase in production has been anticipated. Texas is your big wild card, though. Texas, I think, upped their cotton acres an estimated million two. So they were kind of responsible for the over and above. So we're looking at you, Texas.
Yeah. Okay. So we'll just have to keep an eye on it. But it's still well north of where it was 6 months ago. I mean,
it goes back to just like what you're talking about in soybeans. If you're anticipating an increase in production based on bullish old crop factors, you need to make sure that you're at least locking in some of your profit on your expected new crop.
All right. Now I want to turn to our questions here from our Twitter followers. We've got one here from Devin in Marion, North Dakota. He's on Twitter at Catfish Ball Club. Devin wants to know if the July-December corn futures rally this summer, what are scale-up pricing targets to have in place to take advantage?
On the July side, we started selling at 390 futures.
Okay.
For us, we started putting HTAs in place because we feel summer basis will be stronger. For those of you, that's in Michigan. For those of you in North Dakota, I can't say the same. There's a lot of corn that has to move. Farmers in North Dakota, I think, are holding 100 million bushel more than they were a year ago. Pretty sure you're storing it in your garages and stuff. Mm-hmm. So you know that basis, your neighbor is going to be your worst enemy. So you're going to have to really look at cash prices and keep those in mind. But we started looking on the July around 390. The December has been $3.95 to $4 to get started with the thought process of taking advantage of carry once it matures in the out months, because right now there's not as much carry there as what the market should be giving you with the carry out that's expected, for new crop based on supply and demand outlooks. So anything in that $3.90, $3.95, $4 has been our starting point, and I anticipate at some point this year you're going to see December corn trade up into that $4.40 to $4.50 range. So I would make sure that you have scale target orders in place between $3.90 and $4.40 to $4.50 for a significant percentage of your expected production.
When you're working with folks who are scaling up sales, do you like I want to say an automated plan? It's not automated, but okay, we're going to start at 4. We're going to sell another increment at 410, 405, 415, 425,
I like you to
up.
Pull your emotion out of the market.
Okay.
So what tends to happen is the farmer, of course, is the most optimistic person in the world, or else they wouldn't be a farmer. You are then cheerleaded by people such as myself who sit at these tables and give you all of the reasons why the market should continue higher, when most of those have probably already been baked in, because we, of course, want to make you happy and tell you some of the things you want to hear. So a lot of times the emotion in the market really gets boiling, once you're halfway through a rally. And I've seen a lot of guys get into where at this point in the year, when we're looking at 360 whatever futures on the July, they'll tell me, gosh, I'd sell the bulk of my old crop at 390, and suddenly we hit 390 and that idea goes out the window and it's 410. So I always recommend to guys, when it comes to at least the first 40% of the sales that you need to make, that you put in a solid target order and just let the market trade.
Okay.
And then figure out the direction. Now, if something epic happens, like in 2012, we readjusted all of our target orders the first part of June, actually a bit higher because of the weather and how dry it had been. But to be honest, the 2012 is probably not likely to be around the corner, especially with as wet as we are now. So to put those in place and let the market do its job makes the most sense to me.
Okay. Question here from our buddy Glenn in Bryan, Ohio. He's on Twitter at Glenn_newcomer. He's asking, with improved seed genetics, should we be concerned about the bearish trade emphasis on trendline yields and carryover stocks into 2018?
It's always something to keep in mind. It is a ceiling to any type of price rally that develops because of weather. At this point in time, with the crop not even, with the seed still in the bag, of course, we have the highest point of yield expectations.
Right, that's 600 bushel corn there.
Exactly.
Yeah.
It's got the potential. And so it is concerning to me. I did joke the other day that this is the time of year where yields are always going to be the greatest and demand's always going to be its worst. And that's when you look at new crop outlooks that people are putting out there, that's exactly what's happening. People are dropping demand by 300 or 400 million bushel because of the expected Brazilian crop, but they're also willing to count the yield's going to be 175. Yes, we have seen improved genetics, but I wonder if we aren't going to start to see, with the costs that are involved in buying that triple stack or whatever it may be, are we going to see a little bit of a turnaround to where we may not pay for those genetics in order to help firm our bottom line or lower some of the input costs? And I think that's a real issue that we need to be aware of. But it is something, of course, you want to know or want to be cognizant of the fact that the improved genetics that we have made are likely to help keep a firm floor under the yield expectation.
And, we talked about 2012 earlier. There's an example where we saw it in action, massive drought, and yields were astoundingly good given the severity of that drought.
We still managed 124 bushel the acre on corn and 42 bushel the acre on beans. So that shows what our genetics are capable of doing, for sure. And the other question, of course, is we're not going in. We have, I think, 4% of the corn area in the United States right now is in drought.
Yeah, we're in.
We have exceptional amounts of both topsoil and subsoil moisture that the corn crop's going to be able to tap into. And so even if we did turn dry, it's one of those things where those genetics will help. I'm not saying that 155 bushel to the acre crop, which is phenomenal, or was phenomenal 10 years ago, it would completely flip the market on its head and put us back to rationing levels.
Yes.
We're not looking for that 124 bushel the acre crop anymore. We need to be concerned about a sub 165.
Okay. All right. Well, now, we're talking about rationing. We're talking about demand. We have been talking for a long time about the strength of demand on the export side. We've seen it on soybeans. We're already talking about increasing China's demand again.
Yes.
Phil in Ontario, Canada, is wondering, with demand for U.S. corn at or near record, how can the U.S. increase domestic corn, and I'm going to throw it to beans, demand as well?
We're seeing it in my home state. We were talking about it in between tapings here. We are seeing crush plants open. We're seeing it in North Dakota with ethanol plants coming online and things of that nature. Cheap corn will help cure itself. Now, of course, unfortunately, when you increase demand and perhaps see a limited amount of production because of the lower prices, suddenly that corn or that ethanol plant that was such a great idea in 2016 may not be the best idea in 2019. You have to see. But we are seeing, and I mean, it would be really nice to be able to jump the hurdle of the E15 introduction and see that brought in. Of course, there's infrastructure programs that have to go in place and all of these things. The biggest thing I always tell my customers is you're your biggest spokesperson. So if you're driving a flex fuel vehicle and not putting E85 in it when it's available to you, you're your own worst enemy, because the only way you can increase demand is by encouraging not only yourself, but those around you to use those products. So
you bet. Now, we also talked about the hog herd continuing to increase. We've got all of these plants that are under construction. Some are wrapping up construction as we speak, but incredible increase in the hog numbers nationwide.
Yeah, but our exports are huge.
Yes.
So, and we have to make sure that we maintain a strong export pace, which means we have to encourage decent trade relations with our biggest buyers.
All right.
So,
well, here's our next question to you from Troy in Cobb, Wisconsin. He wants to know, do we expect bullish movement in corn in the near term?
Depends on your definition of near and if it stops raining or not. So,
okay.
To me,
let's talk 6 weeks as the near term.
6 weeks is the near term.
And let's talk old crop first.
Old crop first. Well, I think old and new are going to trade in tandem.
Okay.
So if old moves, new is going to go with it. Because the thing is that if we see any sort of reduction in old crop carryout, which I anticipate a little bit, I do. It's my Achilles heel perhaps, but I do think that we'll continue to use significant amounts of corn going forward. Ethanol exports were a record high. They're huge. Now our stocks are big, but we're still producing reasonably because the grind margins are there. I think we've got to see what happens with weather. If we're still talking too wet throughout the heart of the Corn Belt, because there is some talk, oh, well, the Northwest Corn Belt's going to start planting. Okay, Minnesota, Dakota, and north of I-80, maybe in Iowa, is not going to carry the country. No. So, well, you may see some tractors rolling, which I did this afternoon in Algona.
Wow.
Nothing major, just, I think they were getting out and because they were tired of sitting in their shop making tractor noises, really. But I do think if we maintain a wet pattern, which it does appear that we will, and perhaps if we start to see maybe a shift in the Brazilian corn outlook, we could definitely see a rally take place in the next 6 weeks in corn.
Push December back north of $4 or to $4. Let's.
Yeah, 405 I think was the high level that we saw here a couple months. It feels like forever ago.
And change.
Yeah, it was 40. It would have been about 403 because we 3 cents for an HTA, and I got some $4 targets filled. So I know that. And yeah, I think we'll probably test those highs, maybe even try to test the 410 mark on the Dees if it stays exceptionally wet and we see other reasons. If crude can stay strong, because crude has been rallying and corn hasn't been paying attention, and see a continuation of reasonably strong ethanol and export pace. Right now, we only need to sell 14 million bushel of export of corn a week to meet the USDA expectations. It's probably likely we'll exceed it considering we sold 38 million bushel this past week.
Exceptional. All right, now, next we're going to do something different, Angie Setzer. We're very excited about this, and I encourage all of you watching, if you are from a land-grant institution, whether it's Iowa State, K-State, I suppose if you go to Nebraska, you can send us a question. Any of those, the Ohio State University, we want to hear from you. And so we're starting it out with our friends just north of us in Ames, Iowa. And this week we are featuring a question from an Iowa State student. And you can learn more about this project if you listen in on Thursday's M2M podcast. Angie, here is our first question.
As we've had a wet spring so far, and that may set some farmers back in terms of getting in the field, how will that be affecting our commodity prices, and ultimately, will that be impacting our cattle markets as well?
Good question. She's a smart girl. I'm probably going to have to hire her.
Yeah, thank you, Erica.
Right. Yeah, I mean, it is something we'll want to pay attention to. The hardest part right now is the equipment that we have out here and the farmer's ability to work through the night, which blows my mind.
Yeah.
As soon as, if we were to turn dry in the next 2 weeks and warm up a bit, I don't think we would even remember the first half of April being this wet. Now, if we finish the month very wet, then yes, you are going to start to see probably corn prices kick into gear. Soybean prices will probably have to drag because any thought of losing corn acres is likely to switch into soybeans. So you will see the corn prices start to rally. The old adage is higher feed costs are going to damage your livestock markets. I don't know if we'll see that because it seems as though the cash trade and everything that's going on on the cattle side of things at this point really is impervious to high grain prices because distillers are still in the 80s. Your soybean meal is quite a bit cheaper than what it was a year ago. And we have a lot of corn still on hand to feed, even if it is a touch more expensive. Guys are still going to be able to feed it. And all the rain, of course, is going to help with pasture conditions.
Grass conditions were exceptional through Nebraska and Kansas and southern Iowa.
Yeah.
So, yeah, there's a lot of feed out there available for livestock. Well, Angie Setzer, I want to thank you so much for taking the time to talk to us this week.
Thank you for having me.
Of course. And please, everybody, join us again next week when Don Rose will sit across from me here at the Market to Market table, and we will examine how butchers in rural America are working to stay a cut above the rest. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.